Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello and welcome back. Price is moving down, so let's take a look at the current levels we have. First of all, on the quarterly time frame, as mentioned in previous videos, we are looking at a few scenarios, and it may take some time inside this higher time frame range between the low and the upper SR level. So the main levels to watch here are the quarterly low itself, the upper SR level. These are the two higher time frame areas I'm focused on right now. Of course, there are levels above and below, but currently the focus remains on this range. Nothing has really changed here, but I've added another level, the 50% retracement of the wick of the previous candle. This acts as additional confluence for our local levels. Now, looking at the yearly price and time chart, we can see that price is rejecting from the area I mentioned yesterday. Personally, I didn't trade it, but the levels are still being respected. So what I'm looking at here is the same as before. This area is support until it is not. Simple as that. Wicks below are completely fine. Sometimes we even get deviations of this level. What I mean by that is visible here. When we get a daily candle close below or above a level, we can see continuation toward the next level until it is proven otherwise. And that proven otherwise often comes in the form of deviations. For example, the last time we had a daily close below the level, we then saw an aggressive move back to the upside. That's what I call a deviation or a trap. Call it whatever you want. The important part is understanding that this can happen, and we need to keep it in mind when a level appears to be lost. So for now, this remains our support area. We have horizontal levels. We have the price-time trend line that was respected previously. So overall, it's completely fine if price wicks into this area. But if price starts closing below it, then technically we aim for the next lower level, until proven otherwise, as explained. And if price doesn't choose a direction anytime soon, then this could turn into a longer range or even a bottoming formation. Because if price just moves sideways for another month or more, then all tools start to reset. Momentum indicators like RSI and even data points begin to move higher. So a longer range would actually be bullish. However, we don't know how long price will range here. That's why, as mentioned in previous videos, this is the point where I would prefer to see some movement. Now, let's switch to the range levels. Here we have the range, the value area for the range, and a few key levels. I've added one more SR level, and we also have the quarterly wick, mainly the 50% level of that wick, which is now the next area to watch if this current low fails to hold. For now, of course, I remain in my trade. So naturally, the preferred scenario is the first one, where price just chops around here, makes everyone emotional and uncertain, and then suddenly blasts to the upside. But we always need to be ready for the scenario where price moves against our trade direction and have a clear plan for the next step. That next step would be the lower area, where I would look to either take another trade or add to my position. In that lower zone, we have multiple confluences. The SR level, the 50% quarterly wick, the monthly statistical average for wicks, the monthly average close, and, in the worst case, the structural stops on the left side of this. So this is not just a single level, it's an entire zone. Now, a few important things to keep in mind. If price moves down, then a wick or SFP into this area, ideally not deeper than the mid of the zone, is completely fine. What we want to see afterward is a reclaim of the mid-range. However, if the mid-range rejects price, or if price starts trading inside this SR zone and begins to chop around, then things can get tricky. In that case, price could fill the entire SR area and eventually move lower into those structural stops. So the preferred scenario is a fast reclaim. But if we start seeing prolonged chop in that lower area, that's not a good sign, and I would be more open to lower levels. Until then, this remains an SR level, and the mid-range is still key. The area I marked below the mid-range is especially interesting for deviations. If that level gets lost, then we either expect the range low to be taken out, or we look for strong signs of reclaim. So it's a very important level, but my approach here is not to react too quickly if it gets lost. I would wait for either a reclaim or confirmation for lower. As long as price is above, I'm looking for longs in these areas. The first one has already been executed, and the next plan would be the lower level. Now, looking at timing. Based on the monthly averages, we would like to see the bottom forming within this current time window, which aligns perfectly with the daily cycle window we marked out earlier. One interesting thing to note, you can see that in bearish months, both the highs and lows tend to form faster, often within the first 2 weeks. After that, price usually transitions into a range. For bullish months, ideally the low forms early as well, giving price more time to move higher. So right now, we have a strong time and price confluence. We know the levels and we know the timing. We just execute step by step and try to catch the bottom. Worst case, we take a few losses. Best case, the first scenario plays out cleanly. And a very good case is when we are wrong on some trades but still come out profitable overall. And with that, let's switch to the local intraday levels and the trade chart. This trade is now safe as it hit TP2. And in my opinion, that was a very good area to secure the trade because we can already see that price retraced from there. It also rejected from our level and the trend line, which acts as confluence for the daily cycle. That means the daily cycle signal is not confirmed yet, so we wait. Keep in mind that signal would most likely act as extra confluence for a trade rather than being the actual entry, but we'll see how it develops. For now, my plan is to stay patient in this area where price is chopping around. If price moves lower, I can use the secured profits to add to positions. For example, if price makes a new low. Or I can simply close this trade, secure more profits, and look for a new setup at the next level. If I decide to take a new trade or add to this one important thing to keep in mind is the invalidation. It will be below this SR level. Yes, I can exit earlier if I see signs of weakness or if price starts struggling, but the actual invalidation is losing this SR level. If that happens, then as mentioned before, lower levels become likely until proven otherwise. So with that, you should be prepared for the scenario where price moves lower and know what to look for. For now, locally there is no action area for me. I'm just waiting. If price moves higher, the next TP area would be either the range high or even higher levels. This is planned as a swing trade, but as you can see, I'm also prepared for downside scenarios. And I'm taking profits at important levels, because if this turns into a longer sideways range, I don't want to give back profits while price moves up and down, and I just sit in the trade doing nothing. All right, before I wrap it up, let's take a quick look at momentum and the local level. Daily momentum is bouncing from the lows and needs a close above 65.4K to remain bullish. To confirm direction, we would like to see a break of the trend line for the daily cycle that I showed before. Until that happens, yes, it's a nice bounce in momentum, but it can also form bullish divergence, which would mean a new low in price. So for now, it's a nice confluence, but not an active signal yet. The 12-hour time frame is choppy, not really useful. It's not at the lows and not at the mid, just moving sideways without clear direction. The 6-hour time frame doesn't look great. Price dropped while momentum is still sitting high. It could form divergence, but currently it remains bearish as long as Bitcoin is closing below 69K. Next, the 4-hour time frame is also moving down and remains bearish as long as BTC is below roughly 68.6K, 69K. On the 1-hour time frame, momentum is at the lows and is now hitting the average loss for the day. We also saw some shorts coming in at the lows on order flow, so a bounce makes sense. However, this is not really an area of interest for me. There could be a scalp setup if price forms a range here, then takes out the lows and the local lows. They're a quick trade, but that's purely educational. I don't even know if I'll take it. As you know, I usually share my trades on Telegram when I enter or exit, but scalps are tricky. By the time I post, price is often already higher and I've taken TP1, so you can watch these areas for reactions, but I can't guarantee I'll update them in real time. That's why I focus more on bigger moves. Setups, we can plan days or even weeks ahead and then execute when the time comes. So with that said, lower levels are better for me, or simply staying in this long, since it's already a safe trade. The next real action will come either lower or higher, not in between. From a local market structure perspective, there isn't much to work with. As you know, higher timeframes are all in a downtrend: monthly, weekly, daily, and 4-hour. So we're basically operating inside a range and mainly using the 1-hour structure. That 1-hour structure was broken down yesterday, and the current swing high is at today's high around the monthly open. That's now the key area. If price moves up, we want to see a reclaim and continuation. If price rejects there, that supports the bearish case. One important thing to keep in mind: VWAP is currently sitting right in this area. That means if you long here, you're longing into VWAP. If price reclaims and you short, you're shorting into VWAP. So it's not an ideal trading zone. If price moves higher, we also have the average gain area above yesterday's high, roughly in the same region. If no volatility comes in, we likely just get more chop instead of a clean move. So for me, this is still not a trade area. I'm just waiting for the next high probability zones. Sure, there can be scalps or day trades here, but I don't have a setup in this area, so I wait. And with that, ladies and gentlemen, I'll wrap it up. Nothing much has changed. Price is still chopping, but the goal is to be ready for the next key areas before they happen. That was the update. Have a great day, stay safe, and I'll see you in the next one.